and welcome. My name is Brian Caplen, editor of the Banker, and we're doing our post-IMF wrap-up, exploring some of the issues that have been going on over the last couple of days. I'm here with Silvia Pavoni, who's the economics editor, and Paul Wallace, who's the Africa editor. Just before I ask you any questions, let me just give you a little bit of a background around the Institute of International Finance meeting this morning, which I went to. It was a very interesting central panel where we had Jamie Dimon, obviously CEO and chairman of JP Morgan, Anshu Jain, CEO of Deutsche Bank, and Bodwin Pro of BNP Paribas, all on the same panel.
Must have been quite eventful.
That's right, and there was a discussion about two sort of key issues really. One was, do we still need banks of this size and complexity, which dovetailed with a session they just had about resolution planning. And as you'd expect, those three CEOs were in favour of big institutions, which they said related to the complexity of the economy that we have now. And then obviously the second very relevant theme for the moment was about could the US default and what were the implications. And all three panelists just threw up their hands in horror and said, if it happens, it's Armageddon, it's all over.
Right.
Right. So I think there's a plea there that the US lawmakers actually fix it, because obviously that's overshadowed the, I don't know how it's been for you, but it's overshadowed the meeting to some extent. But you're obviously concentrating, Silvia, on Latin America. Have people been worried about the US debt default, or they've been occupied with other kinds of issues?
Well, what happens in the States obviously always has an effect on most parts of the world, and it has the quantitative easing and the talks about tapering have had an effect on Latin America's currency. So for some countries,
well, obviously we saw the situation where there was a big problem in Brazil when Bernanke first announced they were going to taper it.
That's right. But other countries such as Colombia are actually quite relieved that their currency seems to be cooling down a little bit. So, so it's not all good news, bad news. I'm sorry. But actually, one of the key themes that seems to have emerged from most of the talks I've heard and the conversations I've had with people from Latin America is the one of integration. So both from the trade agreement side, but also financial markets integration. So it's something that many countries are working
on at the moment,
which is
November issue.
Fantastic, yes. So it's great timing for me. So
all right. So let's see if we now turn to Paul on the Africa issues. I mean, what if we address both those issues? So QE, does that affect Africa? And integration, which is clearly an even bigger challenge in Africa because of a lower level of economic development, and also the fact that you've got 50 plus countries to deal with.
It's been quite interesting that QE has, and the tapering of QE in the States has not been mentioned at all in the African panels or in the conversations I've had with African ministers and central bank governors and things, apart from two countries in sub-Saharan Africa where they do seem a bit worried, and those are South Africa and Nigeria. Both of those have seen big portfolio inflows into their bond markets in the last few years, and both of their currencies have come under pressure in the last few months.
All right, so there's a worry you could have a sudden sharp outflow of funds.
Yeah. But apart from those two countries, no, there's been almost...
And interesting, of course, that those are the two biggest, the largest economies and the ones that are investable, really.
Yes, and those are the two with the biggest capital markets as well. But other countries, if you take Liberia or Gabon or something like that, no, they're focusing on internal factors and aren't really worried about monetary policy in the US.
All right. And what about the integration issue?
That's a big issue. It always is whenever there are conferences about Africa. Africa has the lowest rate of intra-regional trade in the world, and
it's all done in dollars as well.
A lot of the trade is done in dollars, and African countries, they export their sort of markets. They focus on external markets. They're focusing on selling commodities to China or to the US and importing finished good for those places. There's very little trade between different African countries, and that's something that's been talked about again today. And one of the things that's been quite interesting this time is that people have been emphasizing the role of infrastructure in bolstering intra-regional trade.
Absolutely, the same in Latin America, actually.
Yeah.
It's very interesting.
They say if you don't have good roads between countries, if you don't have good ports, if you don't have good railways and things, that's a huge barrier to getting a lot of trade done.
Final word from you, Silvia, then on infrastructure, because you've written about that a lot in the magazine, haven't you?
Sure.
And the key thing, of course, is financing it. So it's not something that banks can always do by themselves.
No, and so there have been obviously contributions from multilateral agencies, But for some reason, all these big plans seem not to have evolved at the speed that everybody wished for. With the recent Pacific Alliance development, so the Pacific Alliance is the union of countries as Chile, Peru, Colombia, and now Mexico as well. There seems to be a push within each individual countries, but also on a broader regional base to grow the local infrastructure. Obviously, Colombia is a growing market, very interesting as an investor destination, but unless they don't develop the ports, which sits on the Pacific, then not much can be done.
Okay, all right, thank you very much. Well, this is signing off from the Banker team at the IMF World Bank annual meetings in Washington, where we made history by having the Managing Director of the IMF, Christine Lagarde, on our front cover magazine wearing football gear.